Welcome to Financially Fluent with Ray Godleski of Southeast Wealth Partners. Our goal is to equip you with the knowledge and tools necessary to navigate your financial journey with greater ease and efficiency.
Hey, good morning and welcome to the next episode of Financially Fluent. I am your host, Ray Godleski, and I'm always excited when we have a guest on the show. Our audience should know today's guest is a top-selling author. And while Andreas and I are going to get into some details about trade finance, I'd really love for our audience to understand the importance of diversification when it comes to investing. There are many ways to invest, and I would stress the importance of having a detailed financial plan. And when you're executing a financial plan, that's when financial peace can really exist. So, whether you handle your own investments or you have a financial advisor, I do suggest you do some due diligence when it comes to alternative investments. Alts can fit very nicely into a portion of someone's portfolio, but it may not be for everybody. So thanks for listening and subscribing, and hope you enjoy today's show.
Hey, good morning, everyone, and welcome to the next episode of Financially Fluent. Today, I have a guest from across the pond, Andreas Schweitzer. He is the founder and CEO of Argent Capital, Artist Trade and Invest in Trade House. He's got 25 years of banking experience, as well as private debt, international trade. Also an author of TradeWorks, which was a Wall Street Journal and Amazon bestseller. So, Andres, welcome to the show. How's your week going so far?
Thank you very much for this great reception, Ray, and a very good morning or afternoon from London.
Yes, awesome. You having a good week so far?
Yes, thank you. And the closer we come to the weekend, it's getting better by the hour.
So, before we get into it, tell me what's your favorite month of the year? Just curious from a weather standpoint in London.
Now, my favorite month of the year is April. It happened to be my birthday also. So I always liked April and I always liked Easter. But from a weather point of view in London, it's of course now the summer. June, July, August, we had a beautiful summer.
Yeah. I know it's like, I always think of it as kind of cold and dreary, but I guess it's not like that all year long, is it?
Yeah. No. It's now quite global warming. Changed also the summers even here.
Well, I'm excited to have you on the show. And what I think we'll start with is, you've worked in trade and private debt, investment banking. Just curious, how did you kind of land on trade finance as your mission?
Really unexpected. As a young man in the early 80s, it was in my early 20s. I did what a Swiss can do. You work in banking and you can work as a Swiss, you can work in banking, watches, in cheese or in chocolate. So I skipped the watches and I skipped the cheese. I worked a bit in banking and then I joined the Switzerland's second largest food company called Jacob Suchard, chocolate and cocoa. And in 1986, they needed someone in their Panama outfit to deal with the cocoa and coffee trade from Central and South America. So as a 26-year-old, I find myself being in trade finance. To be very honest, little did I know what I was doing. But that's how trade finance started, and I found it fascinating from day one. If you sell commodities or other products, you ship them, you reship them, you sell them while they're on the ship. So the world of trade is a very exciting space for me.
I guess it was so exciting. You wrote the book TradeWorks. Tell me a little bit about the motivation behind it.
Yeah, this is then around 25 years later, because we then went into private equity, and then in 2010 I came back to Central Asia, and then in 2018-19, just before the pandemic, we had quite a strong Central Asia trade business, and with all the geopolitical issues, we decided, is there not also a European market which we are close to and which we understand? By looking at it, we realized that also that what's called the trade gap, the trades that are not financed, that we talk about the $3 trillion figure, enormous, how much trade doesn't happen because it's not financed by banks, by individuals, by equity. And I realized then also that this happens in Europe as much as it happens anywhere in what's now called the global south or the third world. This is not a third world issue. This is a worldwide issue. And the more we researched, we didn't find much to write. So at the end, I said, why don't we wrap all this in a book cover? We call it Trade Works. And it's an Amazon bestseller. My other story is a Wall Street Journal sort of made it up, the letter there, but this one is an Amazon. We now have it out in English, and since this week in German, we'll do an Arab version, hopefully before the end of the year. And I tried to explain where trade came from, why there is so much trade. I mean, every toothbrush, any toothpaste, any the software drink has been financed at some point before you pick it up at your grocery store. There's trade finance is in everything. Whatever is behind you in your office, the chair you are sitting on, a manufacturer has manufactured it and you buy it from the furniture store, and financing has happened in between. So I want to explain to the non-financial investor, those who don't spend all their day, people with a proper job, not like me who spends all day doing finance and stuff like that. So I try to explain where trade is, where the risk is, where fraud is. I mean, there's names like Greensill. You just have to open the Wall Street Journal or Financial Times and you read a lot about it. About regulations, why banks don't finance fuel, why they don't like sugar, because sugar kills, what's called ESG, these regulations and the capital. And what we have added in the second version is also a lot about blockchain, because there is a big technology opportunity to make trade safer, like many other businesses, by taking them on blockchain, which, by the way, has nothing to do with crypto. Often people think blockchain is crypto and vice versa. This is purely a technology play for us. And I was in Saudi last November. Saudi is one of the very important markets now in the Middle East. We also have added a big chapter about trade in and with Saudi. That's a bit the summary of this probably 3-hour read.
I mean, real quick though, is in layman's terms, right? Trade finance. What would just the average person? What should they be thinking of? Like, what does that even mean?
You sell something to me, or I sell something to you. I sell you 100 copies of my book because you run a successful bookstore. I want to be paid the moment I ship it. I even want to be paid ideally when you order it, and you want to pay when you bought it, and ideally when you sold it. So everybody wants to make the other one the banker. I want to be paid as early as possible, so I need less capital. You want to pay as late as possible, so you don't need capital. And in the middle, you finance the trade. That's where the word trade finance comes from.
Okay.
And of course, this is not about 100 books. This is about millions of tons of steel, of carbon, but it's also about pharmaceutical. We finance a lot of pharma products in Europe. We finance petrol stations in Spain. So you give them the fuel on Monday and they pay you on Friday because they have a tight cash flow and banks don't finance. So
is LNG gas in that category too?
Yes, but LNG is a government game. I mean, LNG, if you take countries like Qatar, they only deal with governments and they make 20, 30-year contracts. This is between nations. This is all the big trade companies, the Bunges, the Gunvors, the Trafiguras, all the big names, the Cargills. But this is not our category. Our category is the Mittelstand, the SME, the small and medium enterprise, who has a hard time getting financed by the banks, because they have regulatory issues, they have capital requirement issues, or the business is too small for them that it's even worth dealing with it. So we finance these niche markets at a higher margin, of course.
Right. So so you got collateral, and then I guess from a turnaround standpoint, what's the turnaround time on something like that?
That depends very much the product. Some people want 180 days, other want 360 days, a whole year. We would not go beyond 3 months, 90 days. So, for example, on pharmaceutical products, our cycles were always between 35 and 90 days. It depends how fast the seller sells and how fast he reorders. Fuel, if you finance fuel stations, the turnaround time is a week. You give give fuel on Monday, you get cash on Friday, you give fuel on Monday again. So it very much depends, but I would say the bulk of it is sort of 1.5 to 3 months in our case.
Okay. So, most of the audience is thinking about, investments and diversification. So if you were thinking about where does this line up from a diversification standpoint, should somebody look at this as a substitute perhaps? And if so, it's correlated to the stock market, not correlated, more like fixed income. Kind of how do you see it?
We are a subset of private debt. Absolutely. It is a fixed income type of product because you normally know at the beginning of the trade what the result is. You give someone a credit against interest. We prefer a profit share. So if I know I get 5, 10, 20, 30% of the margin, depends the situation. There's no absolute figure. So I know that I get X back after 35 days. And if the trade is late, and this is often one of the issues, not even a risk, but an issue, you remember the situation of this huge boat which blocked the Suez Canal a few years ago. And I mean, that delays worldwide supply chain by weeks. So what do? You don't have a non-payment, you have a delay, and the client will pay once the product is there. So I like it because it's not correlated to the stock market. It's not correlated to global politics. It's not related to wars in a way, because even during wartime, you need trade. You need your products. And that's why it's my favorite asset class. But I also must admit, I'm really not very wise on the stock market.
Okay.
If you would talk to a hedge fund manager here, they would give you a complete different vision of the situation.
Right.
So it's a fixed income product backed by collateral. It's a very down-to-earth industry. You deal with very tangible goods. There's no derivative in it. It is a product which goes across the ocean or across the road.
Right. And I'm assuming a ship gets, they lose their load of sports cars in the ocean. There's insurance to back up the person doing this, or is that not the case?
That's the maritime insurance. Yes, you have various. We just have a legal claim for someone else. We do also quite advisory, and there was one case where two ships collided, and one had a load of 41,000 tons of barley, and the merchandise couldn't be saved. So they let it all go into the sea.
Okay.
Now, with your cars, you hopefully don't do that. You recover them, but barley was a very nutritious moment for many fish there, I guess. 41,000 tons. So there you have a product insurance, you have a maritime insurance, you have theft insurance, of course.
Okay.
You can't have fraud insurance. That's always a problem. You insure the buyer. So we would always take a down payment, or we get a letter of credit which says we are paid for this product at that date so much, or we take a credit insurance on the buyer against the economic risk of non-payment.
So a couple of follow-up questions. One would be, I guess from a return standpoint, I know there's gonna be a range. What might that look like? And the second question is really around like principal protection, I suppose, or even interest, like interest rates and foreign exchange. Like, does that have any bearing on how these perform?
Oh yes, means you have all kinds of situations. We happen at the moment to trade in Europe, and mainly in euro. We have a couple of dollar trades because commodities are often quoted in dollars. Our money is in pound, is in euros. Our investors are also in euros, maybe Swissy. So they cover their foreign exchange risk themselves. We accept euros and we pay back euros. And so I tried to avoid a currency hedge and a currency exposure and leave this to the investor because it just complicates matters. But if you would have to, what you would do, let's say there is a trade euros against Swiss francs, you would sell your Swiss franc forward at 90 days or 180 days. The only annoying thing is if you have a delay, then you have to renew your hedge also. So it's just an additional complexity which we try to avoid. But big companies, of course, have the financial departments who hedge this all the time. Now, the principal protection or the protection in any event, as I said, on the credit insurance, you buy something for 100,000. You buy barley for 100,000. Let's say you buy uh, medical goods for 100,000. You ship them. You have the transport risk, which is insured by transport insurance. You have the shipping risk, which is still insured by transport insurance. Then you have, and now you are with the buyer. And now the buyer, you insure the buyer. Normally you insure it 90 or 100%. So it depends how big your margin is. If your margin is less than 10%, then of course, or you can insure both. You can insure the totality at an extra premium. We know of a case of a company who insures the entire thing, but I think it's very expensive. It eats into your margin extremely. It's better to insure 90% and keep a 10% residual risk. We never had a claim yet, and we had fraud situations like many others have. Someone walks off with the money or does the wrong thing, then you have to fight for it. So it happens in every business, but it's a minor issue.
So right now, are you, from a participation standpoint in this, are you seeing it mostly from institutions, or are you seeing individual investors growing this segment? What are you seeing right now?
Yeah, it's an interesting market split. You don't find a lot of trade finance products in the market, at least not in Europe. The US, I don't follow and I wouldn't know, but in Europe, there are not many. There are a couple of trade finance funds out there, out of Mauritius, out of Switzerland. Asia has a lot of trade finance fund, but European banks don't. In Europe, this is an institutional play because it's also not regulated. Yes, the investors come it depends a little bit where you're in the world. Asia has a lot of trade finance funds where private enterprise issues that and private investors invest. I'm not familiar with the distribution in the US. We don't follow it. We don't have a US business. In Europe, it's very much an institutional driven business. And banks make big deals with big companies. They don't make deals with small companies. And they don't have a retail or not even a professional investor product. There are a handful of funds maybe who offer trade finance. And that's where we saw the opportunity as an alternative to have a fixed income product, a very stable fixed income product for our own assets and also for the clients that are close to us. One of the reasons I could imagine is that many regulators in Europe don't think that trade finance should be regulated because it's a private debt product, and maybe because it's not a retail product. So you regulate less where the professional investor is active than where the retail investor is.
All right. So at the moment, this is not available to American investors. Is that true?
Oh, no. Of course it's available, but I don't know how much, I don't know how many retail and how many. Of course, you have a lot of trade finance. I mean, there was even a company in Florida. We looked up when we did the research, and all they do, they finance bicycles to Florida residents. So that's nothing else than trade finance. Huge business, very narrow niche. So no, that's a lot of trade finance in the US. It's a huge market, but we're not familiar with who is institutional and who is retail. But we also have requests from Americans to invest with us. That's US is a big.
For those type of investments here, usually someone has to be an accredited investor. There's different levels.
Exactly.
Right. So whether they're a qualified client, qualified purchaser, or just an accredited investor, do you happen to know someone wants to buy this, what level they need to be at?
Yes, in Europe, we only trade with professional or semi-professional investors. You might call it accredited. For example, the minimum is 100,000 euros to invest. That's what the EU-regulated alternative investment fund stipulates.
Okay. Yeah.
So
Yeah. That's kind of what I thought it would be. All right. So I guess, from the type of investors that tend to be drawn to this, again, I guess we're looking at, hey, we're diversifying our portfolio a little bit. We're trying to get some stable income. And I guess from an appropriate standpoint, are you finding that someone might be putting, 3% towards this of their overall investable that were 10%? Like, do you have just curious, any numbers behind that? What y'all are seeing?
our investors today is obviously I started myself, then my company, so we put in company money, then befriended family offices came and other investors. So I don't know, probably they invest between a few hundred and a few 100,000 and a few million. So this is sort of mid-sized family offices, the single, multiple family offices, individuals. We have at the moment not yet large funds, very large funds, because it's not so easy to absorb 25 or 50 million in one go. We're going towards these tickets now, especially on the commodity shipment. So I'm sure people put in a few percent of their assets. It's probably they look at it as a fixed income product, as a credit insured fixed income product, and put it in the bond category.
Right. Yeah. I think from a trend standpoint, what I'm starting to see a lot of is private investments is becoming more and more democratized, and they're even becoming diversified. And so I would imagine this is probably available in some of those uh, private investment companies right now.
Oh, absolutely, absolutely. It's our fund has an ISIN number, so you can put it in your portfolio. It's not stock market listed, but it's a security that can be bought through banks and booked into your portfolio. So it's
Yeah. Do you see a day in the future where somehow this would be possibly in an ETF or a mutual fund, or probably not?
now the mutual fund. The problem is the liquidity. We cannot run a usage
Yeah.
model. They have daily liquidity because my trades take time. They take even if they take 7 days, I have 7-day liquidity, 35, 90 days. I cannot block a lot of cash just because investors want to get out. That would not be very good use of the asset also for the other investors. But what one could do is make a market and trade this on the NAV basis, because it's very simple. Every day what your position is. There is transparency. We have a software, and every investor can get access and look at each position we are having at any given moment. So an ETF could certainly be a model. Probably we'll look at that
Okay.
in a year or
Yeah.
two.
Yeah, it makes sense. And then for those, there are folks out there that, ESG was kind of a movement there. And it's, I don't know from a momentum standpoint how that's looking right now, but if somebody's thinking about ethical trade, would somebody have any idea in something like this, how that's working out, or not really?
Oh, yes, you could, of course. If you are a large firm, you look at your supply chain and you make sure that you are ESG compliant to a certain degree. Now you also have even anti-ESG funds, because they all
Oh,
say this ESG sign is also a little bit hypocritical.
right.
My cousins do a lot of chocolate in Germany for many 100 million since 75 years. And suddenly the bank says, we can't possibly finance you anymore, says the banker while picking up chocolate in the meeting. We are not allowed to find sugar because sugar kills. Textile from countries like Bangladesh, child labor, fast fashion, environmentally unfriendly. I buy all that, but none of us sits in the office without a shirt because we comply with ESG. Fuel banks, fuel is a dirty product which you can't possibly finance. Yes, but everybody pours it in the car. We have to be real. We preach
Yeah.
water, but we are very happy drinking wine. Defense. I have a friend here in London who is now doing a defense fund. where the thing is going. Defense is, of course, the maximum and ESG thing, absolutely immoral, unethical to invest in defense, except if you use the tank to defend yourself and not to attack the neighbor, or your rocket is defensive and not offensive, and the plane also. I'm certainly not a judge of any of that. I can only observe that it's a complicated discussion, and there will be. But of course, we are not. We to take this back on a very, very serious note. If you trade sugar, you buy the sugar from a refinery which has a good reputation, and where you had a look that they really complied, and you don't have child labor in Brazil or any of these things. So I think there is even a small firm or fund like us have an obligation to provide a minimum of ESG, which goes as far as the next one who checks then the supply chain, which is the manufacturer. And today there is a very strict view, and I'm all for that these parts of the supply chain are done. Cannabis, medical cannabis was on a high a few, silly expression I know, but was on a high a few years ago, and then it got taxed and it took a dive. Now it's all coming back. The Germans, the Swiss, the Brits, they all consume a lot of medical commodities, so about medication. So we are financing that again. Is this ethical? I think so. Is it legal? Absolutely. And it's a medical product.
Right.
Of course,
right.
you're not
Yeah.
you're not financing anything you sort of would puff, but you finance what you can put in the category of medication.
If you're looking for advice specific to your situation, then take a look at this episode's sponsor, Southeast Wealth Partners. To learn more about their team and approach, go to southeastwealthpartners.com. Southeast Wealth Partners is a great next step to be financially fluent.
Well, we're going to do a lightning round here in just a second, but one other kind of just thought I was having. So we have AI, right? You got geopolitics, we've got tariffs and reshoring, like anything in there you see from a trend standpoint that's going to affect trade finance, in a positive or negative way?
As I mentioned before, if I take a step back from AI and go back to blockchain, which was the flavor 10 years ago of the season, today blockchain for us is a very important tool to put our trades on blockchain to secure them. It makes payment flows and product flows and data flow much safer. So technology plays a very important role. AI we use, like many of your listeners and yourself, for research. We do a lot of research today on AI. We look at trades, we look at people. So it's absolutely, it was a game changer, and we try to stay very informed about both blockchain and AI. For me, if I had a magic stick, I would convert everybody into crypto, because it's just faster and easier and incredibly well documented. Every payment in a wallet is fully transparent, contrary to some popular belief where everybody says, oh, only sort of very strange people use that. This is, of course, not the case. But it's very difficult to convince the large companies to pay you in crypto. It doesn't work. If it hasn't been adopted by a multi-billion company in their treasury, it just doesn't exist. And we deal with
it's making progress
money
here in the last few months in the US.
Absolutely, and I really hope it will be generally adopted. Digital money is a great tool for us.
Right. Yeah. I agree. Well, let me ask just a couple more questions here. So, like a trade myth. Is there any trade myths that are out there? Maybe you'd like to bust that?
Matt, probably that I had this on another podcast, that there are a lot of crooks in this business. Everybody on this call, of course, particularly excluded. But if it's true, if you Google fraud and trade, you come up with normally very large cases. And one of the cases which has been publicized enormously is a thing called Greensill, a multi-billion case. You have the Gupta case, and which it's all over the place in the Wall Street Journal. I mean, I'm not giving away here anything that is not way public. So it's always a few hundred million or a few billion. So this hits the headline. But, the Wall Street Journal would write fuel tanker from and to Venezuela arrested. They don't make a big article, speedboat in the Caribbean arrested. So size matters for the newsline. So
Right.
if you have a fraud because someone didn't sell or buy or do what they did and it's 100,000, that's just normal business risk, which you have in every business, whatever you produce in service or in goods. But you simply have to be very careful, like you are in any other activity. And I don't think then it is more dangerous than any other activity if you really do your homework. Put in the insurance, put in the rails on what you're doing. For example, we are very involved in the trade. We don't invest just in someone else. We don't give money away to a third party. We used to do that. Now we do the trade ourselves. So we become the owner, the title owner of the product, and we resell the product. So I want a collateral. You have to be very close to your money, and in this case, the product, to make this as safe as possible.
Okay. Well,
you have a lot of fraud, in letters of credit, but not only in trade, but it only shows up in trade, and that's where blockchain. I think once the industry moves, also the banking industry moves documentary credit to blockchain, it will be a much safer game for everybody. And there are big moves.
Right,
the big
right.
banks are all on this because they see the technical opportunity to improve the deal.
Yes, and it seems like as long as, from a big bank's perspective, as long as they can kind of be a part of it, they'll be okay with it. But if they're not a part of it, they're going to resist that big time, and it's going to slow things down for that ever happening. Would you agree?
Yes. We deal with a lot of mid-sized banks, and there are quite a few banks who give trade lines again, but you have to look for them. It's not obvious. It's a niche market. As the small trades as ours, small and mid-sized trade is a niche market. The large trades is a game for large companies with large banks for large deals. That's a different game, which doesn't need guys like us who run a trade fund. But our word may be on the returns. We had a year 23, we did 19% net. 24, we did 9% net. This year we haven't traded a lot because there were changes in the fuel and in regulations. You have to be able also to step back and don't chase the trade, like you shouldn't chase the stock.
Right. Right.
So it's better to keep the money in the bank account and skip something if the trade is not perfect. So one has to be disciplined like any other investor, like you, me, and anybody else who looks after own and other people's money.
Yeah, it reminds me of when people are talking about, maybe they invested in something very private, very small, right? And the returns on it. And it's like, first of all, are you taking on more risks? I always compare things to the stock market, because the stock market, if you're just in a stock, you can buy it and sell it intraday. It's super liquid and very transparent, right? And but when we're comparing things to a private investment, and maybe it's less liquid, okay, is it less liquid or more liquid? Okay, if it's less liquid, I would expect more returns, but still given a level of risk, right? So just because something's private doesn't mean it's more or less risky than something that's publicly traded. You know what I mean? So, anyways, just kind of to your point is, when people are thinking about all the investment choices out there, it really, to me, comes down to a financial plan and what is your own personal liquidity, meaning, how easy is it for me to get money for something I need for a problem or an opportunity, right? How easy is that? And then on the flip side, most people want to grow their money for the long term. And so, given their risk capacity as well as their risk tolerance. So, I think we're going to do one more thing here before we go to a trivia question. But, I want to kind of put the floor back to you. If you want to kind of sum up trade finance and what could somebody expect? Who does this really appeal to? So to kind of like throw it back to you to kind of summarize what we've been
Yeah.
talking about so far.
I mean, as we are not stock market listed, there is no secondary market. Otherwise, you just buy and sell the shares. Maybe we do this one day in 2 years or so. We'll see. But at the moment, there's no need. So we used to have a liquidity of 3 months and 6 months. But all our investors, they really come for a longer term game. So what we do now, an investor commits for a year.
Okay.
And if this year comes to the end, they decide if they want to renew for a year or take the money out. And the reason we need this stability is I cannot suddenly tell a supplier, so sorry, now it's June, the money is back, I can't finance you again only in October. I mean, the client is gone and I'm just not a reliable counterparty. We have to be very reliable because the parties rely on the financing we produce. So we say we finance you for a year and then we will renew or not renew. So everybody uh, can calculate in a very very clear way. I would look at it a little bit. If you look at real estate, except you are a quoted real estate fund where you buy and sell, real estate is not a liquid product. You probably are private equity. You are 5 years lockup normally. It's so we have a 1 year engagement, and we just started now also a real estate initiative because there's quite some interesting real estate trade, at least in Germany, and we also do a 1 year lockup. It's this is not the money. This is not your daily liquidity you can park with us. It's an investment. We are not a treasury product in that sense.
I think you just summed it up really well, which is there's times when you want money, quote, locked up for a little bit, right?
Yeah.
But not super long. And so for those dollars, somebody might think about it. And on the flip side, somebody that's holding money for really long periods of time, this is a shorter hold than something that's a 5-year hold. Is that fair?
Absolutely. So it's a 1 year. We decided to go on 1 year, and we didn't get any pushback. To the contrary, people even say I leave it 2. But that's so individual how everybody.
Right. Okay. Well, look, I don't know if you've heard or not, but we like to do trivia at the end for our guests. And so hopefully you got another minute or two to stay with me and answer today's trivia question.
All the time.
All right. So I did try to, I'll be honest, I used a little ChatGPT today to come up with Britain or UK, Europe, and America. So your 2 categories to choose from. I'm only going to give you 1 question. It's either going to be music trivia or sports. What is your preference?
Sports is certainly not what I feel strong about.
Even if it's golf?
Golf.
Yeah, I mean, golf or music? Which one do you want to go with?
Golf or
music? Which one's your preference?
I play a little bit of golf. I listen to music. I'm sure I will fail both, but give it a try. You can take both also if you want. Let's see.
Well, I tell you what, let's start off with music.
Yes.
I don't know if you're gonna get this or not, but which British rock band released the 1981 hit "Don't You Want Me"? It's one of the best-selling singles of the decade, and later became a defining act of the new wave synth pop era. Any idea?
I really, really would like to cheat now and ask ChatGPT, but I have not the faintest idea. Not the faintest idea. Tell me.
I'll give the answer, and then we'll try another tough one. But this one's the Human League. It is a tough one. I remember the song. I could probably play it more than I can remember the name of the group. But all right, tell you what. So we'll do one more, and hopefully maybe we'll get this one. I don't know. I will tell you it's a little tough unless you're following golf. But in 1995 Ryder Cup at Oak Hill, so I think that's in Europe. There's a dramatic Sunday comeback. The Europeans beat the Americans. Which Irish golfer made the winning putt?
Why are you doing this to me?
Wait. Let's use some ChatGPT and say, I tell you what, we'll make this multiple choice. How's that sound?
I'm terrible at these type of things, but I'm very happy to keep going and not providing any answers. Yeah.
All right, so
Let
we'll
me put it
give
like
multiple
that, Ray.
choice.
I think we are better. We are better at trade finance than at answering the quiz.
All right. Well, I tell you, I want you. You're gonna get a chance. Was it A. Winston Churchill, B. Bernard Langer, C. Nick Faldo, or D. Philip Walton?
What about the Irish golfer? We're still talking about the Irish
Yeah, the
golfer.
Irish golfer. Which one of those was it?
Langer certainly was German. Churchill, even I know that he probably wouldn't qualify for that. And the other two names were?
Nick Faldo or Philip Walton?
I would go for Walton.
Yes, you got it. Yay! See, you got there. You
Okay.
got there. Yeah, yeah. Well, thanks for playing, man. That was fun, and that was tough. I understand.
Wonderful. Yes,
Yeah.
I should have prepared myself for a tough quiz with you.
Yeah,
But,
yeah. Oh, no worries. I'll probably get some feedback from my office. Like, Ray, you got to make these a little easier. These are really tough. But I just throw it in ChatGPT, see what it comes up with, and so that's what it came up with. But well, look, thanks again for your time. This has been great. Hope you have a great weekend coming up. And tell us one more time the name of your book.
Yes, and so yes, and by the way, we have so obviously there is TradeWorks. The title is tradeworks.info. I can send you a link. We have a write-up by Forbes. We also have a link to our webpage where Artist Trade Invest /insights, and there are a lot of articles on there. So we really like to publish and we like to share know-how. If anybody is interested to peek there, to have a look at it, we don't ask for data or anything. It's just free for everybody who is interested. I'll drop you the links, and if you want to share them with your audience, you're all welcome.
Okay. That was good. That's great. Thanks, Andreas, for being here. And for the audience out there, if you have any questions about financial planning on any topic, feel free to send it in to ray@scwealthpartners.com. And we'd love for you to subscribe and share Financially Fluent to others. See y'all
Ray,
later.
thank you very much for a great hour. There was great inspiration, and thank you for your interest in our exciting niche market. Thank you so much.
Thank you. Signing off.
Thank you for listening to the Financially Fluent podcast. Click the subscribe button below to be notified when new episodes become available.
This communication is for informational purposes only and should not be considered tax, legal, or accounting advice. You should consult with a qualified tax professional, accountant, or legal advisor regarding your specific situation before making any financial decisions. Investment advisory services are provided only in compliance with applicable laws and regulations. Ray's opinions are not based on the specific financial situation of any investor, so they may be unsuitable for some investors. The information on Financially Fluent does not constitute a solicitation of the sale or purchase of securities. You should consult a professional advisor before executing a security trade or taking any other action based on information contained in this program. Securities and investment advisory services offered through Osaic Wealth, Inc., member, FINRA SIPC. Osaic Wealth is separately owned and/or other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.